I'm Jessica Hallenbeck with Signature Real Estate Group. I have my husband Andy Hallenbeck and our good friend Shelly Panzarella with Prosperity Lending with us today. We are going to take the market update into a part two. What do we think is going to happen with the forbearance that's continuing? Are we going to see foreclosures? What happened to them all? And what's just going to happen to the market? Are we going to see availability? Are we going to see an increase? Is the market going to crash? We're going to talk about it. All right, let's dive in. So we're going to talk about the market. You know, we just talked about how we're at a record median home price. We have a very low inventory. And what does that look like going into the second half of this year? We currently are still in a forbearance moratorium, and that was extended again to July 31st. Yep. So do we think that's going to be extended another time, or what are your thoughts? I mean, we don't know. We're just kind of making a guess.
I mean, I think that if it's not extended, they'll make more accords to try to, you know, not get people, you know, they certainly don't want a large homeless problem at one time if that is going, if they are seeing that as a possibility.
Right.
So they need
on
to
the mortgage side, do you know anything about the, you know, ability to streamline into modifications and refinance?
Well, the modification, they just came out with a 40-year modification, or 40-year term for a modification. So for FHA and VA borrowers that are in forbearance and need to kind of get out of it, that's one alternative, is to modify them into a 40-year, and that'll lower the payment in essence as they come out of the agreement or out of the forbearance piece of it. As far as, you know, I would say we'd probably extend through September when the unemployment wages end, right? I think that's the date when most of the states are going to come out of it, and the national, I think national has it, or the nation has it up through the end of September. From a lending standpoint, I mean, I know a lot of people think like banks are just mean, but they really do want to keep our owners inside of the homes, and so they're doing multiple things, whether it's deferment, where they're putting, or true forbearance, where they're deferring the balance to the end of the loan, or they're doing the 40-year modifications, and then some of them are just holding off on payment, and they're paying property taxes and homeowners insurance at the same time. So the owner is not making a payment at all. You know what I mean? Because you, as a lender, they want to protect the asset,
yes,
right?
Absolutely.
So they're adding that amount to the back of the loan as well?
They would have to, yeah.
I mean, they can't just pay it for them.
Right. So at some point, whether it's, you know, forbearance or amortized over the time frame, all of those things are going to be included in that forbearance piece of it. But
and this is mostly with the FHA.
It's for both. It's for even conventional.
Okay.
The 40-year term specifically today is Ginnie Mae, which is FHA and VA. So they're already doing that today.
Which those loans could have less equity just because they start either at a 0 down payment or a 3.5% down payment. But we've just seen that we had a 20% increase in the median home price. We know that the appreciation rate, I believe it's in the high teens. That people are seeing more equity in their home. So are those people, because they're tacking us on the back, just literally maybe at a even kill? I mean,
I think that would, I mean, just based off of what we talked about on the market data, like for those who came in with 100%, VA is 100% financing, FHA minimum is 3.5. So if you take the 20% minus, you know, fees costs and all this other stuff, I mean, I would think you'd see more like break even, like you said, or short sales, a very little amount of short sale, but I don't see foreclosures across the board, because value is going to be there, right, to basically sell the home. And then I think we talked a little bit about the rental market being different, you know, for those people who are having to exit out of their home.
I think the floor is also higher. I think, you know, when people hear foreclosure, they harken back to the 2008, 9, 10 days, and you know, when the floor was, you know, houses went to the bottom. There are people that is not going to happen. You know, there's how many hedge funds standing in line to buy anything and everything that will give them 5%, you know, return, and you know how they're getting it right now with current market prices. They are currently the most active player in the market. The minute that any sort of downturn happens, they're just going to step their game up and eat those things.
Yes.
And if you think about it from 08, like indicative of the market, investors stood back, right? They were
Yes.
waiting. Here, they're in. You know what I mean? So that must tell you something as far as that stability, or something as far as the appreciation factor for the market, that if they're in today, that thought that everything's just gonna, come out and everything's gonna foreclose and that we're gonna hit 2008 again, I don't feel it, I don't see it, and that's just one market.
Well, we didn't talk about this as something to talk about, but it's the cost of living as a whole is up, and it's continuing to go up. But if a home, no matter where you rent it or if you buy it, has a payment, because prices are so much higher, now rates help, but even the rental market, that's why the investors are purchasing, because if they own such a large amount of the rental market, they're going to keep that stable. It's like owning in a whole apartment unit, but they own that many of homes, right, over the whole valley.
Yeah.
That was the analogy that I got when I spoke to a hedge fund purchaser. And I was just like, wow, this is an interesting conversation, because they are aggressively purchasing. We didn't talk about it in the market update, but 31% of the sales are cash.
Wow.
That was May numbers. I'll have June soon, but like 31% cash. That was
Crazy.
not what it was like a year or two ago.
We just talked about it on one of our videos a couple months ago, and it was 22%. So I mean, that's a steep increase just in a few months. So
I think historic average is under 10.
yeah, across the nation,
Yeah.
across the country, yeah.
I mean, they have just so much money to purchase with, billions of dollars
Yeah.
earmarked for them to do this, and I think it's going to cause somewhat of a shift, and the percentage of people who own a home versus the percentage of people who will rent homes. I'd like to help every person I know buy a house,
Yeah.
because I feel like you secure yourself, you lock that in. No one's going to tell you to get out. They're not going to raise the rent on you because the payment's locked on a 30-year fix. But it's real interesting to see how this is kind of playing in to the cost of living, inflation, as well as kind of playing into that.
I mean, partly there is no place else to go for yield. I mean, where are they going to go? They're going to go into the stock market, where the bond market they can't go to the bond market with the money and get any yield out of it. So they've got to go somewhere to get yield. At least in the real estate market, they've got an asset protected yield. In theory, they don't have to be the smartest guy on the street to derive the yield from the stock market.
Right.
So that's why they've got all this money, and now keep in mind we just took, for every dollar, just made more dollars, a substantial amount more dollars in the last 5 years. Or the last year, if all that money's got to funnel into somewhere, and everybody's seeking yield.
Well,
They're driving people into these markets.
Yeah.
Individual investors that I know, they always are like, I want 8% cap rate, I want a 10% cap rate. I could not find that today from anyone. But the investors are looking at 4s and 5s.
Yeah.
4s and 5s. That's just cash flow positive slightly. I mean, if you did a mortgage for the small investor, but like they're not making as much as you would think, but it's a volume, it's a numbers game. And if they control it and they can get the rental price to go up,
Or at least
then
faster.
it'll become a 6, 7, 8, 9 eventually. Think about all the investors that purchased when the market's down. They're really have a great rate of return on that.
If they held on, for sure.
Yeah.
I mean, the interesting thing is, for years, rents were relatively stagnant here. I mean, for a good 6-7 years here, a single-family residence in whatever section of town pretty much changed hands for that same period of time. I'm still seeing some of the property management companies, in my opinion, are still sleeping on the rents. We were just talking about this the other day, where they're individual, you can get a lot of money out there for rent. Now, I don't know if everybody's doing it, but some people are.
So, we will help people with investments. We've helped people get rentals. You can find houses that they should have raised the rent. Because I run rental comps for an investor who's wanting to purchase, and I'm like, why is that one so low?
Yep.
If these people got like $3,000 and they only asked $2,400,
And they look
doesn't make
similar.
sense. It's because they're not really going in and analyzing the demand. And then when you look and you see that they rented it in 2 days and they had probably multiple applications, they could have increased that price.
They didn't seem to
Now,
get there. They will arrive at it.
Is there
Yeah.
like a dollar per square foot, like, or at, you know what I mean, a way to kind of
There
track
is.
that if you're
Yeah,
a
so it
landlord?
used to be right about $1 a square foot.
Okay.
But it's definitely much higher now, especially on nicer homes.
In specific communities, maybe?
So we're getting closer, like $1.50 probably,
Wow.
do you think?
I mean, it depends. I've heard, Vegas is so.
It depends on the area.
Yeah.
Vegas is such one of those places where it's like, very micro pocketed
Yes,
up
yeah.
for sure. So it's definitely different in that sense. I've heard a lot of investors when you've heard like this 1% of purchase price per, different. There's a lot of ways that
You
people
can't do that in
can't
our
do that
market.
here. You know what I mean? So there's a lot of ways that people arrive at how they get there. But I can tell you, just in our own experience,
Well, maybe you can.
from something we were
I know,
looking,
like,
yeah, no
what-
kidding. For something we were looking at in November, something we purchased in November that we were looking to clean up and ultimately rent. Between the time that we were able to do that, which was like 5 months, we took about a 30% increase in what we were going to ask for rent. So
Wow.
that just shows. Now maybe we weren't quite right to start with, but 30% increase in 6 months, just in what we had thought this particular property would demand.
And it's multiple, applications.
Applicants, yeah,
coming
Yes,
Absolutely.
and I took 12 applications on that and got double deposit in 3 months up front.
Wow.
So I mean, it just shows you what people are willing to do and jump through.
Yeah.
You're getting the last couple, somebody
It's
recently.
competitive on both sides. It's competitive on the resale market. It's super competitive in the new homes, which we haven't talked about, but we are going to touch on here. And then you just look at the rental. So we just don't have enough homes.
Period.
It's just the number of doors out there are not enough for the growth that our market is seeing here in Vegas.
And then not
Yeah.
only that, you got a huge generation, massive generation coming up behind it that has just started to begin to buy homes.
Right.
They are not. I mean, the market's
Which one
not-
are you talking about, the millennials?
Yes.
Okay.
They are not. The market is not prepared for that.
Yeah.
For that home buying. For that.
Well, I
baby
think
boom that we
I
had.
think we'll end up seeing. We don't have a lot of condo developments being built. The starter homes, they're not building a lot of that. I think we should probably see a few more townhomes being built, like that would give people an entry.
More likely
That could be
townhomes.
affordable.
I would say townhomes more so than single-family residences. The land out here is just too expensive for them to. They have to get that density to.
That's right.
Yeah.
Yeah. But it's just not quite there yet, and we're still, and we
Condo
can't
prices are
get
ticking.
there because of
Condo prices are ticking.
Yeah.
Resale
Are you
condo.
seeing a
Yes.
lot of developments out for condos or?
no,
Not
no,
at all, right?
not yet. Anyways,
Yeah.
I keep thinking I'm going to
Just
notice
saw one
it.
pop up over here that I noticed for the first time. This right close to the office here, but I may have been there for 2 years. I just didn't know.
Exactly. No, I mean, inventory of lumber and supplies, and there's just so many things that are kind of, causing things to be a little out of whack and not get back to normal.
Yeah.
And then you throw, it's like taking a pot, and throwing all these factors in. It's, it's going
Land-
to take a little bit to get back to
Yeah,
a good
settle
normal
down.
kill. Yeah.
Land was already expensive here, and we already are kind of at a shortage of it. The BLM, they have to jump through a lot of hoops to get new stuff
To
out
get
here.
it, yeah.
And the tracks were already trading places 3 years ago for record prices.
Yeah.
I mean, what are they going to want next time they put a big track together? What are they going to want out here for their, who knows what the next, they're going to play off these prices and charge more. Just like the new home builders are already
lumber
doing.
just went down a little bit,
Yeah.
but I don't think we're going to see the builders pass that on.
No,
to the
the new
Could be
game
something
is
else that is.
the lot
yeah.
premium.
Yeah.
That's the new
Yeah.
game. The new game is pay me for the land.
Well, okay,
Yeah.
so builders, each builder is doing things a little bit different. So one of them allows you to, everybody that's interested in this particular lot can bid. It's literally like resale. But then there's others where it's a lottery and you just kind of wait, you get drawn out of a hat out of 50 people and you have no idea if you're ever going to get drawn. Wow. It's really interesting trying to help somebody with a new home right now because it's like luck of the draw. Or a couple builders where you could overpay. And, I actually particularly think that the one that is doing, which I guess I could say it, Pulte, they're the ones that I know that you do bid on the lot, and whoever's the highest bidder is going to get it. So they're doing a profit forward way of moving through this challenge market that we're at.
Similar to the resale then, basically, right? It's going to be highest and best, but it's not for the home, it's just for the lot, right?
Yes,
And then you
it
put
can't.
home
The
and then-
price of the home is still
The same.
is. You lock that in a contract, and which there still have the volatility of the prices. But now what I've heard is that most of them, they buy their lumber package and they're some of their biggest packages before they ever even release the lot, so that they can control those costs now.
Yeah.
I think that also slowed them down building
Yes.
in this last year
Yeah.
too, was
Yeah.
when they realized they had to control their costs.
Yeah.
Yeah, I don't think you'll ever see the builders sell a year in front again.
Right.
Yeah.
I don't see the builders be like, yeah, you'll be ready in next April. I just don't think you'll ever see that again.
Well, I've already noticed it. In Sky Canyon, I was showing a batch of new homes, and we went to a Toll Brothers, and they had a couple that were halfway built. It's like these are quick move-ins, and they weren't really ready for like 4 more months, but they had just released them. So I was like, I knew this was going to happen. Where I mean, I felt like it was going to. Can't predict everything,
Yeah.
of course, but I could see that being the way to move through this. Like, get it going, or at least have it almost ready so they can keep those costs.
At least they know where they have some semblance of what their costs
Yeah.
are,
Yeah.
So if we can get caught up and increase the homes that are being built, that will help the market as well, because we really do need the builders to do their part, because
I wanna say
the
that-
investors are buying up everything they can
Yeah.
resell.
Last time I looked at the home permits, I want to say it was like, and don't quote me, it was like 30,000 in the height of the building and the 2,000, and I want to say that we had only ticked back to like 13,000 or something.
Yeah.
And I don't know about where we are exactly recently, but it can't be too far off of that.
No, I think.
If anything, it might have gone down from there.
Yeah, and I think they're starting to pull, but because of all the I think they call them supply chain issues that they've had, they slowed down just because they had to, right? Because their customer service was becoming a huge issue with these constant delays for like even appliances. Like they couldn't get appliances in when their homes were ready to go. But you know, for us as a
And they
lender,
can't
you
sell
need
it. They
right.
cannot
They can't
sell it
that's
without
right.
it.
That's right. We couldn't close on it because the appraisal would be waiting for the washer and the stove, you know, and so they're like a couple of weeks delayed just in getting those things. It's small things that you don't even think about, like lumber being gigantic, obviously,
But even the permit process itself.
Yeah.
With the offices closed
Yeah,
and those
you're
kind of
right.
things,
Yeah.
they
Doing
were
it virtually.
all
Yeah.
the GCs, at least, or this, you know, that were working in the subs and all those things. They were. We have a friend at the GC, and they wound up having to go. They were literally going in person with, you know, with the one person that could go there because that's the only way they could expedite. Otherwise, you wound up in the line.
wow.
Otherwise, you just got put to the
back of the
yeah
the waiting list also for
for everybody.
right.
Yeah.
Eviction moratorium, do we think that's going to be extended? And even so, what does it look like when that starts to come to an end?
I mean, I'm personally going through a process, which I think from the forbearance standpoint too. So here in Nevada, they have CHAPS. And so we have, I had a tenant who was unable to pay her rent, and this has literally gone on for 6 months. The eviction moratorium I think it ended right in June, end of June. And so she had applied for this program called CHAPS. She started it in, I want to say April. From the moment, like it was very slow getting through, but literally the week before the eviction moratorium ended here, she got approved and everything was done.
And then they pay all the back.
They paid it all back from the 6 months, and then she just has to keep applying. It's good for like a 12-month period. I don't know that many
Do the
people...
property managers also get paid for that back rent that they missed? Because I realized, talking to a property manager, that when people weren't paying, they also got hurt.
So I private manage that. So we were able to include late fees, any other fees we had. So if I had to pay her taxes or you know anything like that. Well, no, taxes are on my mortgage, but like if she had a pool, we would include that just to upkeep the pool so it didn't get bad. If we had to do landscaping in the front, we were able to include any of that. So any fees associated with that rental or with that rental in that month, we were able to include for payment. So I would assume a property management fee would be part of that.
Yeah.
Sounds like
Because
it.
they did, you know, they would have taken a loss on that too. But I think from that standpoint, as a, you know, owner of a home, like there are many mom and pop, you know, landlords out here that may not have even realized this was an option to them. My tenant, fortunately, I thought it was kind of ironic though that she went through this whole process and literally the week before the eviction moratorium, everything kind of it literally like sailed through. So I thought it was weird that it happened that fast, but it had been out there for like 3 months pending for a very long time. But I think what's going to happen from that, like for me, when you talk about rents, now it's a time now that we can reevaluate our rents. As a landlord, you should be at least $1 per square foot, if not more today, reevaluating and repositioning yourself. And if you missed on those rents for past months, this is kind of the opportunity for you to make it back.
Well, we don't have rent control here
Yeah.
at this point in time.
Yeah.
But if it did happen and you didn't get to the right number at a certain point, you could really be putting yourself into some trouble. I
Yeah.
think. as a financial asset. I mean, I guess it depends on the way you look at this. You know, from everything is relative to what lens you're looking at the picture, right? But I think that, you know, it is a capitalistic society that we live in, and there are numbers that have to be, that are normal, and you gotta go with the market rate, right?
Yeah.
There's only a handful of places that really have rent control. I think it's kind of the boogeyman. You know, I mean, it's just,
I like that you're here, because, you know, we're just kind of, you know, but you're always such a realist, you know, when it comes to.
Well, it kind of is. I mean, people dangle it and say that, you know, beware this could happen, but at the end of the day, there's very few places that have it. And you know, it's just like people worry about Nevada having, you know, state income tax, and it's written into the Constitution. It really takes a significant, this isn't something they go, yep, you know, there's significant changes in, you know, this isn't something that happens overnight.
Which I think is the reason why we have so many people moving here from
Agreed.
California and Washington and so many states,
One
right?
I mean, that, beautiful weather, something to do. I just had a friend of mine move back, thought he was going to retire in Florida on the ocean, lasted 2 years, came back to Vegas. He's like, yeah, I was bored with it. There's just so much to do here from that perspective, you know?
Yeah. The humidity.
I also think.
Well, it's been humid lately. It's so weird.
I know. Yeah.
I do think that if there was, for whatever reason, if some of these things did wind up in foreclosure, I think you're right, they're more likely to wind up in short, you know, because there's an equity position. I think it's like over 50% of the homes in the United States are like either outright owned or more, you know, it's shocking when you really come down and put the numbers to paper. A lot of people have a lot of money in their homes, and it's just that simple. But I think if you do see that type of thing, the kind of going back again to the floor being so high now. The floor being so high now from an investment standpoint, where, you know, where rents are starting to creep up there. I mean, if you go back 30 years ago, I'm sure that nobody thought it was going to cost you, you know, $4,000 for a $400 square foot apartment in San Diego.
Yeah, true.
You know what I mean? They just didn't see it come. They didn't know when they thought you were going to pay, you know, $1,500 a square foot to have a bungalow, you know, there. Like these things. And somebody pointed this out to me when I was like, "You really think this house is going to be worth $400,000, 1,000 square foot house? And this house is going to be worth $400,000 someday?" And somebody used that analogy on me and said, "Nobody thought San Diego was going to be."
That's true.
Now, of course, you've got more reasons to maybe think you're going to get there, the ocean and these kind of things. But I think that if any of these things hit foreclosure, they're going to be standing on the steps of the courthouse to buy them up so fast, and they will change hands so close to retail value that it won't make a difference.
Yeah.
It'll never hit the open market. It will never change inventory for the average person. They will never see these homes. They will never know they existed, and they will be bought up like that, and they will go right into the gar hole that every other.
Which then exactly kind of where I was going earlier with the idea that we're going to see just a reshifting of who's renting versus who's home owning. And it's going to be a little bit harder entry into home ownership. So, you know, time is of the essence, honestly. I always feel that way, but I think it's just because I look at home ownership as an investment tool for your retirement and for your stability in life. You know, I've always dealt with people talk about trying to time the market, and I just think it's a foolish move, ultimately, because it costs you money to live.
Yeah.
Well, I mean, here's how many times, and I'm sure you heard this too with the rates, but we heard it for years. Well, we're almost getting back to the 2006 prices. It's 2018. It's 2016. It's 2009. Like, where does
automobiles cost?
I mean, a loaf of bread costs $2, and now it
Crazy.
costs $4 or $6, you know, or whatever. Like we're talking about a bag of potato chips.
Yeah.
Bag of potato chips is like $7 for a bag of potato chips now. Like, you think everything else is going to go backwards? They didn't give the potato chip money back.
No, or they made
They're not giving the house prices money
or
back.
they made it to where you get a smaller quantity too, so it's even
It's more air instead of
exactly. That else went down.
How do you sell more toothpaste? You make the hole bigger, sell more squirts out, and that's kind of that's the MO. So none of these things are going to go backwards. I don't think these foreclosures. I don't think that, frankly, they're going to show up.
Yeah.
I don't think if they do show up that the average person is ever going to be aware they showed up, and there's not going to be any opportunity for anybody to buy them. They might even likely get packaged. You know, they could get packaged and sold directly to all these big shots that are in the market right now. You know, say the iBuyers, somebody comes in.
That's very fair, but
it's entirely a possibility. I mean, the infrastructure is getting there for these things to get packaged and moved in that you know.
Yeah. I think a bank would want to capitalize on the market if they have that opportunity, even if it is coming to a point that they're short. Because we talked about on the last video where we've got a bank coming in that's super aggressive on like stated income, but the biggest part to that stated income, no income, rental, just using the rental income. The biggest piece to that is they want the buyer to put 25% down. So they're okay with everything else. They just want to know that there's some collateral, their equity in that collateral, so that in the event something should happen, they have the home.
Well, skin in the game, right?
Yeah, that too. Yeah.
Well,
Yeah.
it's also the, they figure that's where they see the downside.
Mm-hmm.
You know what I mean? So they figure,
They can-
what's the worst case? We go back to what prices look like in the fall of last year.
Right.
That's about where we see
Yeah.
things right now. So I mean, that's people doing. I'm spending a lot of time, money, and effort to try to figure out where they think the backslide is.
Right. If it'll happen.
If it'll happen.
Right.
Well, this was definitely an
They're still
interesting
standing in line.
conversation.
I mean, honestly, they're still standing in line. You put a nice home on today's market right now, $400,000 that looks nice and is move-in ready, and you do an open house on Saturday morning, 11 o'clock, they will be standing in line.
And you'll have at least 3 hedge fund offers.
Yeah,
Really?
and they'll all be fair.
400,000. That was the number you
Yes.
gave.
So you're not saying even, it's not just cash from like our Californians coming in because they're selling their bungalows and they're,
It's hedge funds.
There's
Wow.
several hedge funds
Okay.
that are heavily buying here. I would love to get a breakdown from probably one of my escrow officers on who are their biggest number of buyers. You can go to any escrow company and ask them to give you like some of those numbers because it's public information.
yeah.
They can just sort it for you. And I'd love to see what the top ones are. So I'm going to pull that data here soon.
It's
we'll
a
show that on the next
handful.
video.
They're on the MLS. As soon as the hot sheet hits, they're calling. I mean, you had one where it was on the market in an hour and they offer over a list. That's when I was telling you. And this is one that 2 years ago that place would offer. We would have laughed. 2 years ago they would offer you 20% under market value and said, hey, be prepared for a long list of repairs. And now they're like, hey, we'll give you more than what you're asking for it, and we're going to be pretty good on the transaction.
Yeah.
Wow.
You know?
Yeah, they just want to get the inventory and they're okay with the little stuff. Well, it's definitely interesting to see how we've transitioned here. It feels pretty rapid. I mean, I
Yes.
just think COVID accelerated things that were already in play. It just happened. And it's hard to predict exactly what the future is going to be looking like, but the indicators that we all are talking about here are we're probably going to see a continued increase in the median home price. Now, do you think there's a capping out of this, like where we might get to a certain point and kind of level off? Because right now, I mean, we're just going up pretty aggressive.
I mean, I do. I mean, I do, because I think that the valley's priced itself out a little bit. I think that the residents that have been here for a long time, the affordability has caught up to them. The hedge funds have raised some of this, and the investors have raised some of this, and some of the move-ups have raised some of this. But your average worker in this town that's clocking a 9-to-5 job is really struggling to make their choice of where they want to be in this town, and based on the affordability at this point. So I think that will play a little bit of a role in that.
I'm going to add to that.
But you still have these, they have nowhere to put their money. These hedge funds have endless money, nowhere to put it, and nowhere to get yield. You know what I mean? Think about it. If I told you, hey, you're an investor, I'm going to give you back 5% on your money. I can either put it in ABCXYZ stock, or I can put it in this home over here. What are you choosing? You're going to probably choose what seems like a much more stable product versus this product, right? So I think that's why you're going to see more and more money will come in here as long as they can get a rate of return. So if rents still go up, prices will still go up with it.
Median is the middle, right?
That's right.
Because I'm seeing a lot more on the high end as well. Like more so than, like I think somebody said there was last week the highest sale was $25 million.
Oh yeah, there's some
Yes,
that
cash.
yes.
Right?
Yeah.
So I think that
A loan guy.
aspect of, yeah, I know, yeah, that aspect of it.
He kept his money from that today? Wow.
That aspect of it, though, I think is helping also to pull up that median price because there's so many more homes being sold in the $1 million, $2 million, $3 million.
Yeah, but so we were just talking about this. Okay, so if you take the median is the middle number.
Right.
If you line up 1 to
If
100.
there's 100 on one side and 100 on the other, you gotta go right to the middle.
Yeah.
So they're
The average, though, the average is, I don't want to quote, don't quote me, but I think it's right shy of 500,000.
right up in that, right.
Okay,
Oh, okay.
the average home price. The $25 million home just shot that up.
Screw that,
Got it.
screw
But
that.
not
And they sold an
necessarily
11 right
the
behind it.
median
Yeah.
as much. I mean, there are less lower priced homes and there's just a few more higher priced homes. It's the median is
Yeah.
moving. That's why
Got
we
it.
use the median more than the average, just because it's a better number.
Because
to
your
look at.
higher end could skew that
Right.
I mean,
considerably.
supply and demand,
Yeah.
I don't see much, I don't see a tremendous amount of decrease in demand. The hedge funds are still sitting there. As long as the product that they want to purchase is available, they're gonna buy every single one until they're all gone. So if they just keep putting houses on, they may even take their number up. They may say, we're gonna go under 500 now.
Are
and
you
they-
seeing a specific price point where they're like falling off?
They seem to like to
Sweet
stay
400
400.
is the sweet spot right now.
Yeah.
Will that adjust? Probably.
As
Okay.
this adjusts, they probably
Yeah,
gotta
right.
go with it, yeah.
Yeah.
I mean, I think that just makes sense, but I mean, if they can keep getting more and more for rent too, they'll be more and more apt to keep increasing their prices because they'll just keep going after. It's just an equation for them. They're just
Yeah.
saying,
Right.
I think the guy said if you can get 5% cap rate, they're willing to purchase all day long as there's not, is
Well,
moving ready.
5% on a asset that you have a tangible product behind, like a house.
Yeah.
You know.
That's not figuring
it's-
appreciation into the factor.
Right.
Exactly.
Right.
Or-
I mean, the
or-
risk there is nominal, right? Just because you're either going to sell it or you're going to continue to rent it at
Correct.
market or
Right.
rent amount.
And not only that, I'm sure with the amount of accountants that they have behind them, they're depreciating these things and
Oh,
they're
yeah,
using them every
yeah.
which way, and they've got,
Exactly.
so they've got another set of advantages into it. So I think about this, if you're, again, go back to the stock to get yield and you go back to the house to get yield, you more than likely don't ever sell this thing at the end of the day. It just gives you the yield. Here, you probably have to make some transactions, which incurs tax, events. So here, you're reoccurring taxable event, reoccurring taxable event, reoccurring pay. Here, just paying.
Yeah.
So I mean, that's kind of that's what happens. It's where all this money's in these things.
Whew, enlightening. Well, we'll have you back, Andy. Well, I think we're going to wrap it up here. Thank you so much for spending the time with us to listen to our thoughts on the market. Please subscribe to our YouTube channels and have a great day.